The distinction between stocks and shares in the financial markets is blurry. Generally, in American English, both words are used interchangeably to refer to financial equities, specifically securities that denote ownership in a public company. Welcome to the Financial Market Examiner YouTube channel, where you learn about forex, crypto, and the stocks market. Today on this channel, we'll see if there is a difference between shares and stocks. Similar terminology of the two. Stocks is the more general, generic term. It's often used to describe a slice of ownership of one or more companies. In contrast, in common parlance, shares has a more specific meaning. It often refers to the ownership of a particular company. So, if someone says they own shares, some people's inclination will be to respond, shares in what company? And similarly, an investor might tell their broker to buy 100 shares of XYZ Inc. If they said buy 100 stocks, they'd be referring to a whole panoply of companies, 100 different ones. In fact, that comment, I own shares, might also spark a listener to respond even more generally. Shares of what? What sort of investment? It's worth nothing that one can own shares of several kinds of financial instruments, mutual funds, exchange traded funds, limited partnerships, real estate investment trusts, and so on. Stocks, on the other hand, exclusively refers to corporate equities, securities traded on a stock exchange. Stocks. Let's confine ourselves to equities and the equity markets. Investment professionals often use the word stocks as synonymous with companies, publicly traded companies of course. They might refer to energy stocks, value stocks, large or small cap stocks, food sector stock, blue chip stocks, and so on. In each case, these categories don't refer so much to the stocks themselves as to the corporations that issued them. Financial pros also refer to common stocks and preferred stock, but actually these aren't types of stocks but types of shares. So when people talk about the stock of a company, they're most often talking about their common stock. Common stock represents shares of ownership in a corporation and the type of stock in which people invest. When people talk about stocks, they're usually referring to common stock. In fact, the great majority of stock is issued in this form. Common shares represent a claim on profits and confer voting rights. Investors most often get one vote per share owned to elect board members who oversee the major decisions made by management. Stockholders thus have the ability to exercise control over corporate policy and management issues compared to preferred shareholders. Shares. A share is the single smallest denomination of a company's stock. So if you are diving up stock and referring to specific characteristics, the proper word to use is shares. Technically speaking, shares represent units of stock. Common and preferred refers to different classes of a company's stock. They carry different rights and privileges and trade at different prices. Common shareholders are allowed to vote on companies' referenda and personnel. For example, preferred shareholders do not possess voting rights, but on the other hand, they have priority in getting repaid if the company goes bankrupt. Both types of share may pay dividend, but those in the preferred class are guaranteed to be paid first if a dividend is declared. Common and preferred are the two main forms of stock shares. However, it's also possible for companies to customize different classes of stock to fit the needs of their investors. The different classes of shares, often designated simply as A, B, and so on, are given different voting rights. For example, one class of shares will be held by a select group who are given perhaps 5 votes per share, while a second class will be issued to the majority of investors who are given just 1 vote per share. Shares or stocks. The interchangeability of the term stocks and shares applies mainly to American English. The two words still carry considerable distinctions in other languages. In India, for example, as per that country's Company Act of 2013, a share is the smallest unit into which the company's capital is divided, representing the ownership of the shareholders in a company and can be partially paid up. A stock, on the other hand, is a collection of shares of a member converted into a single fund that's paid up. Are shares and stocks the same thing? For all intents and purposes, yes. Both shares and stock refer to equity ownership in corporations, and owners can be referred to as either shareholders or stockholders. How can I buy shares or stocks? To buy shares or stocks, you need to open a brokerage account with a licensed broker-dealer who can execute your orders on the stock exchange. You also need to have enough funds in your account to cover the cost of your purchase and any fees or commission charged by your broker. You can then research and select the shares or stocks that you want to buy and place the order through your broker's platform. You can buy shares or stocks at your current market price or at a specific price. Once your order is filled, you receive a confirmation and your shares or stocks will be held in your account. In conclusion, shares and stocks are terms that are often used interchangeably to refer to the equity instrument that represents ownership in a corporation or similar entity. However, there are some subtle differences between them depending on the context, geography, and culture. Shares is used colloquially in the UK, while stocks is far more common in the US. Shares is a more specific term that can refer to the ownership of a particular company or a type of financial instrument, while stocks is a more generic term that can refer to a slice of ownership or one or more companies or a collection of investors holding a portfolio. The words also have some other meanings that are related to the original senses of division and trunk. Shares and stocks are both important concepts for investors who want to participate in the equity market and benefit from its potential returns and risk. With this, we've come to the end of the video for today. Remember, this video is not for financial advice, but for educational purposes only. Please kindly share with us your comments in the comment section and let's know how this has been impactful. Subscribe, share, and like after watching. Thank you.